Welcome to ValueVest Daily, where we deep dive into the best value and momentum investment opportunities. Today, we're tackling a massive goal. Is there a blueprint for building $1 million portfolio? We're going to explore what it might take using a very specific mix of 4 fascinating stocks. Let's dive right in. So here it is, the central question for this entire explainer. How much cash would you actually need to put into these 4 specific companies? Google, Tesla, Robinhood, and Hims and Hers, to potentially hit that magic 7-figure number. We're going to break it all down for you, looking at a few different time horizons. And here's our roadmap for how we're going to get there. First, we'll meet our 4 contenders, splitting them into the Titans and the Disruptors. Then, we're going to take a quick pulse check on the market with some technicals before, and this is the big one, revealing the $1 million formula itself. Let's get to it. First up, the Titans. We're talking about the absolute bedrock of this theoretical portfolio. Google and Tesla. You know them, these are the giants, the kind of companies you can really build a foundation around. Let's start with the one and only Google, or Alphabet, as it's officially known. You know, the best way to think about Google's competitive advantage, its moat, is to picture an entire continent, but made of data. Its AI, its massive cloud services, its absolute dominance in search, it's all connected, creating this incredibly powerful, almost unshakable business. And the momentum here is just powerful. Google Cloud is growing at over 30% year over year. Analysts are projecting earnings per share growth of around 15% annually for the next 5 years. And it's not just ads anymore. They have over 100 million people paying for subscriptions like YouTube Premium and Google One. Oh, and it's always worth noting, when a firm like Berkshire Hathaway jumps in with a multi-billion-dollar stake, you know the big money sees some serious long-term value here. And this number right here, this perfectly illustrates how efficient this company is. A return on equity over 35% is, well, it's just fantastic. It shows that for every single dollar of shareholder equity, Google's management is squeezing out over 35 cents in pure profit. That's a well-oiled machine if I've ever seen one. Okay, let's move to our second titan, Tesla. Now, if Google is a data continent, then Tesla is like a self-contained innovation factory. Its advantage isn't just one thing. It's how they've vertically integrated everything, from batteries to their AI-powered self-driving software to their game-changing manufacturing. They literally control the entire process. The Tesla story is all about what's coming next. Just look at these projections, a 25% compound annual growth rate for earnings over the next 5 years. And remember, this is about so much more than just cars now. We're talking about a future with robo-taxis, humanoid robots like Optimus, and an energy division that literally doubled in growth last year. So here's the crucial part. What does the market think about all this? A forward price-to-earnings ratio of over 192? That's sky high. And what this number tells us is that investors are willing to pay a massive premium today because they expect absolutely enormous earnings down the road. All that future innovation we just talked about, it's all baked right into that stock price. Okay, so we have our foundation set with the Titans. Now let's bring in the high-growth engines. These are the disruptors, Robinhood and Hims and Hers, and they're designed to add that really aggressive growth component to the mix. First up is Robinhood. And listen, you have to look past the idea that this is just a trading app. Their ambition is so much bigger. They are genuinely aiming to build a global, all-in-one financial operating system for the next generation. And the numbers really show this aggressive expansion. We're talking over 24 million funded accounts, a projected revenue growth rate of around 25% a year, and their assets under custody shot up 50% in just 1 year. They are moving so fast, beyond just stocks, into crypto, banking, and now international markets like the EU. This quote right here really captures the entire strategy. It's not about making small improvements. It's about a fundamental transformation into a global financial platform. That is the long-term vision that investors are betting on. All right, let's pivot to our second disruptor, Hims and Hers. This company is right at the forefront of the personalized telehealth revolution. Their whole model is about creating a direct, subscription-based relationship with you, the consumer, for your wellness needs, basically cutting out all the usual hassle and friction.
And the growth here is it's explosive. Revenue is up almost 50% year over year. They have 2.5 million subscribers, and that number is climbing fast. They're jumping into massive high-demand markets like weight loss drugs. And just like we saw with Google, that institutional confidence is a huge signal. JP Morgan recently boosted its position by over 500%. That's a massive vote of confidence.
And this number says it all. A projected 5-year compound annual growth rate as high as 30%. Out of all 4 stocks we're looking at, Hims & Hers has the highest growth projection. This is the potential hypergrowth component of the portfolio. Okay, so we've covered the fundamental stories, right? We know why these companies are compelling. Now let's get a quick snapshot of the technicals. Think of this as the market's current pulse, a look at where these stocks are trading right now from a price and momentum perspective.
Let's break this table down really quick. The 50-day simple moving average, or SMA, that just tells us the medium-term price trend. If the price is above it, that's generally a good sign. The RSI, or Relative Strength Index, measures momentum. Now, a reading over 70, like we're seeing with Google, can suggest a stock is a bit overbought, meaning a little pullback might be coming. So for Google, maybe you wait for a small dip. Tesla is looking good. Price is above its 50-day with a healthy RSI. Robinhood is pretty neutral, kind of trading right around its average. Hims, on the other hand, is currently below its 50-day average, so from a purely technical standpoint, it's not in a buy zone right now.
All right, this is the moment we have been building up to. We've got the fundamentals, we've checked the technicals. Now let's finally reveal the formula. What kind of capital are we talking about to actually aim for that $1 million target? Now, before I show you the final numbers, here's the super simple logic behind it all. It's all about compound growth. We take our $1 million goal and we just work backwards using the projected growth rate for the whole portfolio over a 5, 7, or 10-year period. This tells us exactly what we need to start with today. And here it is, the blueprints. Now, for this model, we're assuming you weigh each stock equally. We average out the growth rates of all 4 companies and get a blended projection of about 23.75% per year. So, based on that, to reach $1 million in 5 years, you'd need a starting investment of $343,000. If you stretch that out to 7 years, the starting amount drops to $246,000. And look at this. Over a 10-year horizon, the incredible power of compounding means the starting capital you'd need is just $140,000. That's $35,000 per company. So, we've run all the numbers, we've laid out a potential path, but what's the real takeaway here? What should you be thinking about beyond the specific figures on this slide? First, and this is absolutely crucial, please remember that everything we've talked about today is for informational purposes only. These are projections. They're based on a specific set of assumptions and data, and this is not financial advice. Projections like these carry a ton of risk and volatility, and what happened in the past is no guarantee of what will happen in the future. Please always do your own research. Look, this model shows just one hypothetical path to $1 million, blending some stability with some aggressive growth. So the final question I want to leave you with is this. What does your own path look like? What's your personal blend of titans and disruptors? Thinking about that, that's the real first step. Thanks for joining us at ValueVest Daily. Please subscribe, like, and share so you can keep learning about totally unbiased daily opportunities before you put your money to work. Oh, and hey, one more thing. Please put in a comment if you want us to deep dive into any specific ticker symbol. We'd love to hear from you.